Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, as promised, let's get chatting with the management of PG Electroplast. They reported a strong set of numbers, and more importantly, they've also gone ahead and raised their guidance for FY23, telling you that they're feeling quite confident. Mr. Vikas Gupta, the MD of the company of the operations at PG Electroplast, joins us. Hi, Mr. Gupta. Thanks so much for joining in, and good morning. Well, could you tell us, on your business itself, you have gone ahead and upped your guidance. For this year, you're going to do close to around 2,000 crores, which is good. What is the outlook for FY24 at current reckoning? And given that you have added capacity, at peak levels, what kind of revenue potential can you attain? Go ahead.
Yeah, good morning, Nigel, and thanks for having me on your show. We have raised our guidance to 2,000 crores for the FY23. That is based on the order book and the visibility that we have for the current quarter. Going forward, the kind of Capex that we incurred for the FY23, where we have increased our capacities in AC manufacturing as well as in the washing machine manufacturing, we are hopeful that we should be able to, if we sweat our assets properly, we should be able to achieve a revenue of around 2,500 to 3,000 crores. But that is subject to various assumptions. So we will be sharing a specific guidance for FY24 later on.
All right. In any case, so 2,500 to 3,000 crores is the range that one should be working with for FY24 itself. What about margins? I mean, the last year, there was a fair amount of volatility in commodity prices. Recently, we saw some improvement out there as well. At 2,500 to 3,000 crores of revenue, what kind of margins can you work with? Because then you will have the benefit of operating leverage as well and commodities staying as it is?
Yeah, so Mangalam, what happens, like we have to see how the competitive landscape is also operating. So currently we are maintaining expecting a guidance of around 7.5% for the EBITDA margins going forward also as we increase our revenue of the business. Because the overall the competitive landscape is going to be, I think, will kick in because a lot of new capacities will come in. So we have to be cognizant of that fact also.
All right.
Okay, so you're saying that on a steady state basis, you like to maintain it at 7.5%, right?
Yes, yes.
Okay, got it. But going by the numbers that you all have given, for this year, you will be doing it closer to around 7%, right? Because 2,000 crores is what you're guiding with an EBITDA of around 140 crores. But going ahead, you're saying 7.5%. Now, Mr. Gupta, since the business that you're in is looking up and there's tremendous potential for growth, but even if you grow by 25%, you'll hit your peak levels in the coming year. So the big question is going to be, what kind of a Capex plan do you have? So give us two numbers. One is, what kind of a Capex plan do you have? Post FY24 onwards, you'll require that. And what is the asset turn that we can look at?
So, Nigel, right now, the asset turn that we have is in the range of around 3.7 to 3.8. We are targeting an asset turn of almost around 4.2 to 4.5 in FY24. So, going forward in FY24, we are looking at a Capex of almost around 120 to 130 crores. That is very tentative. We will be sharing a specific guidance on that as well going forward. But we will be increasing our capacity going forward because we are seeing a robust demand and robust response from our clients for all the products that we are manufacturing.
Gupta, going by the number that you're giving us, 120 crores at an asset turn of around 4 times. So this number can take you up by another 500 crores of revenues. Are we getting that correct?
Yes. Yes.
So from that revenue potential of 2,500 to 3,000 crores at peak, you'll go to the vicinity of 3,000 to 3,500 crores at peak, post this Capex.
Yes, so that will be basically for the, because there is always a lag between the Capex and the revenue that you can realize from that.
Yeah.
So we have to figure in that.
Right. I just wanted to understand the composition of your revenue at 2,500 to 3,000 crores of revenue, because your AC capacity, you had said, would peak in the next 2 months itself. You have some expectations for the washing machine business, sanitary ware, you said could be around 15 to 20% of your revenue over the next couple of years, etc. as well. So what is your current revenue composition and where does it go to, say, next year? What increases in its proportion?
So if we look at largely the product business is going to be the growth driver for our revenue increase. Currently, this year, FY23, we are targeting a product business to contribute almost 1,200 crore rupees in a revenue. Out of that, 900 crores will be coming specifically from air conditioners. Almost around 260 to 300 crores will be coming from washing machines, and around 40 odd crores will come from air coolers. At the same time, the electronic division, primarily including the LED television, should contribute to almost around 150 to 200 crores. So going forward for FY24, we are looking at again a rapid increase in the product business and a significant growth in the product business from the level of 1,200 crores to a level of almost around 1,500 to 1,700 crores going forward for FY24.
Okay, all right, Mr. Gupta, all this is looking very good. The street likes what you're saying as well. The stock is up 3.5%, while the markets are more or less flattish. But leave us with how your cash flow is shaping up, and also what is the current debt in the books and where does it go up to?
So currently, our net debt has increased in the quarter close on December 2022. Largely, that has been to take care of the funding for the working capital requirements, where we have to pull in a lot of inventory for AC manufacturing, because we saw a sharp increase in our AC revenue. So we had to pull in a lot of inventory for that. Going forward, if we look at the cash accruals that we will have, I think we will not be having a large dependence on increasing our debt to fund our Capex for FY24.
Right, you know, and on the asset turnover itself, I was just looking at a couple of your peers. Dixon Tech has an asset turn of over 7-8 times. Amber as well, you know, just going by the numbers, rough numbers, has an asset turn of over 6 times. Why is it that yours is lower? And even when you aspire to move higher, it is around 4.5-5 times. Wanted to understand that, one. And secondly, there have been so many schemes announced by the government with regards to component manufacturing, etc. Will you not benefit further from that as well?
Coming back to your first question, please understand the asset turn in our case, plastic molding still is a sizable portion of our revenue of our business, where there is a large deployment of the fixed assets. So going forward, we are trying to improve on the asset turns. Definitely, if you look at the history also, where the asset turns was around 2.5, we have moved to a level of almost 4 now. Going forward, definitely as the electronic business also improves, so asset turn should improve for us.
Okay, all right. Thanks so much, Mr. Gupta, for stopping by and giving us all those details. You know, we'll hold you to these numbers next time we chat, but for the time being, it appears business is on a bit of an upcycle. Well, on that note, though, we'll have a wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.